What do you make of this? I mean, no, really, because on one side you have the success of Airbnb and Uber both of them getting back close to 2019 levels, depending on how you want to measure what's really happening here. And then on the other side, the great success of Peloton through the pandemic. And the question is it over?
Well, I don't think Peloton is over. Connected fitness is a real total addressable market theme. It's a very big market. It's just that they're going through growing pains, unfortunately. The surprise to me, Andrew, is that this stock was down 42% into the print. So, and now all of a sudden they're revising their outlook because of weak bike and tread growth. And that's despite the fact that they actually put price decreases in August. And now they're changing their strategy. Now they're going to go after the less affluent customer, the lower income customer. So that's less profitable on top of inflationary pressures. I think you just have to give this one some time, because at 7 times price to sales, the valuation support, obviously there isn't. So I think in addition, you have hard comps because of reopen. So I think this one at some point might be worth a look, just given, again, the total addressable market. But for now, let the dust settle.
It's definitely, I always think you're one of the great value investors. So when is that something you give it a look at? What's the price tag?
Oh, I don't know about the price tag. I think you have to see if their new strategy changes are going to take hold, right? Are they going to have to start to lower prices on a more regular basis? And that's the thing to me that I'm going to be watching for. So I think for now, Andrew, I hate to say it, but I think it's a no touch, even though it's down now probably about 60% year to date and down more than that from its highs in January. I will tell you this, on the positive side, the positive call out of all these names, that's Expedia. I mean, if there's a conference call to listen to, it's that one. They beat on earnings. They beat on revenues. EBITDA beat by 50%. They're taking market share in Vrbo. Half of their customers, new customers, or half of their Vrbo customers are new. So they're gaining share. They are already booking out to summer of next year. So because it's so strong, he said, if you're trying to get a reservation for this December, he said, quote unquote, good luck. That's how strong the business is. And that spills over into Airbnb as well.
Well, that's what I was going to ask you. If you could own Expedia right now or you could own Airbnb, which do you own? I'm assuming you're going to say Expedia.
I am, because I own it, right? But I got to tell you, I was nervous headed into the quarter because it's trading at 12 times EBITDA. It rallied 17% in the past month. So expectations were high, but they actually delivered. We have talked about reopen consistently, Andrew, for the last year, right? And now we're starting to see the results. So you can pick Airbnb if you're comfortable with 14 times revenues and you're comfortable with they have enough supply. That's the big issue with Airbnb. Do they have enough supply? I think Expedia is kind of the easier story. Booking Holdings is also a good one, too.